Listeners and viewers around the country and around the world. The nation's financial crisis has intensified as federal regulators seized Washington Mutual on Thursday in what is the largest bank failure in American history. Federal regulators have arranged to sell off most of the bank at a bargain rate to JPMorgan Chase. In Washington, talks have fallen apart over a $700 billion bailout of the financial industry due to opposition from Republican lawmakers in the House. On Thursday afternoon, President Bush hosted an extraordinary summit at the White House with John McCain, Barack Obama, and congressional leaders. Bush warned participants, quote, "If money isn't loosened up, this sucker could go down."
Tonight's presidential debate in Mississippi remains up in the air as John McCain has threatened to skip the debate if there's no agreement on a rescue package. Meanwhile, unemployment filings have reached their highest levels since just after the September 11th attacks. We're joined right now by two guests to talk about the economic crisis. Paul Krugman is a professor of economics and international affairs at Princeton University, a columnist at the New York Times. Michael Zweig is professor of economics and director of the Center for Study of Working Class Life at State University of New York at Stony Brook. His most recent book is What's Class Got to Do with It? American Society in the 21st Century. We welcome you both to Democracy Now! Paul Krugman, let's begin with you. What's happening right now in Washington? What do you feel needs to happen? And what about House Republicans walking out on this deal? Do you agree that they should have?
No, they shouldn't. Look, this is scary. We have a freezing up in the financial markets, and while that can seem abstract and nobody sheds any tears for Wall Street, it does kind of mean that there's a lot of sand in the gears of the machine, right? We're not sure how bad it is, but it does mean that it's probably going to start to get really hard for small businesses to get credit. It's going to be, this looks kind of like, it's got a family resemblance to what happened in the early 1930s when the banking system fell apart. And so you want some kind of rescue. Now, we had this intense fight. The Bush administration came up with a god-awful proposal. Basically, give us total authority, no checks and balances, and we'll do, well, we won't say what. And Democrats in Congress negotiated to something which, while it's not something to cheer, is a lot better, and then it appears that House Republicans have blown it up. And this is not good. This means that we might be, let's put it this way, I even in my worst imaginings, I never thought that Republican ideology would bring us another Great Depression, and now I'm not so sure.
Well, Paul Krugman, in the failure of Washington Mutual, I was surprised, the indications of the fragility of the system, because according to the reports in today's New York Times, the cost of the Federal Deposit Insurance Corporation, for instance, coming in to guarantee the deposits of the depositors of Washington Mutual could be as much as $30 billion when the entire fund of the FDIC right now is at $45 billion. And that's why they had to move so quickly, apparently, to do the fire sale with JPMorgan Chase. But it does indicate that there's an enormous fragility in terms of the so-called safety net for banking in this country.
I don't take that seriously, although it's true. Literally, this fund is close to being broken. The money will be found. The bank deposits. Thank FDR for this. Bank deposits are not really the risk. They are insured. The federal government will come to their rescue. And look, in the context of what's going on now, $30 billion, which it doesn't look like it's going to cost anything like that. It might not cost anything as in this case, but that's not a lot of money relative to what's going on. Now, but the fragility of the rest, I mean, basically, look, the indicator that people like, the economists, finance people have been looking at is people have been buying U.S. government debt, short-term U.S. government debt, at practically zero interest rates, because they're absolutely terrified of lending money to each other. They're piling into what's still considered a safe asset, which is U.S. government debt. I guess it's safer than anything else, because if the U.S. government goes, then so does the whole world. But we are pretty much we're at something that looks like it could be 1931. I mean, I don't think, it's not my sort of main central forecast, but wow, this is meltdown territory.
So how do you think it needs to be staved off? What happened?
What always happens when governments finally come to grips with financial crises is they temporarily take over part of the financial system. You look at Sweden in the early 1990s, they basically seized more than half of the country's banking system, paid off some of the debts, wrote off the worthless assets, and then were able to privatize them again. In our own savings and loan crisis, basically the federal government took control of failed savings and loans for a while. And in the end, you basically have to do that. It's temporary, these are unfashionable words these days, but temporary nationalization in a financial emergency is always the way you go. But we haven't come politically to grips with that yet. This deal, which was a step in that direction, was blown up by House Republicans who are saying, oh, well, we can solve this by cutting the capital gains tax, which is sheer insanity, or maybe it's a big joke, but it just tells you how far we are from being ready to deal with this.
I wanted to play for you Republican vice presidential candidate Sarah Palin's comments on the bailout. She was interviewed by CBS's Katie Couric. Couric appeared on The Early Show and introduced part of her interview with the Alaskan governor.
She's not always responsive when she's asked questions and sometimes does slip back to her talking points. So it was a really interesting experience for me to interview her yesterday.
Let's see if that's the case here. We have an excerpt where you ask her about her opinion on the bailout.
Okay. Why isn't it better, Governor Palin, to spend $700 billion helping middle-class families who are struggling with health care, housing, gas, and groceries? Allow them to spend more and put more money into the economy instead of helping these big financial institutions that played a role in creating this mess.
That's why I say I, like every American I'm speaking with, we're ill about this position that we have been put in, where it is the taxpayers looking to bail out. But ultimately, what the bailout does is help those who are concerned about the health care reform that is needed to help shore up our economy, helping the... It's got to be all about job creation, too, shoring up our economy and putting it back on the right track. So health care reform and reducing taxes and reining in spending has got to accompany tax reductions and tax relief for Americans. And trade, we've got to see trade as opportunity, not as a competitive, scary thing, but 1 in 5 jobs being created in the trade sector today. We've got to look at that as more opportunity. All those things under the umbrella of job creation. This bailout is a part of that.
Republican vice presidential candidate Sarah Palin on CBS. Paul Krugman, your response.
I'm sorry, but I am a college teacher, and that sounds like nothing so much as a freshman who hasn't actually read any of the readings and confronted with an essay question on the exam, and so he throws in sort of random paragraphs of stuff that he thinks kind of sounds like economics. That was incredible. That was totally incoherent.
Michael Zweig, I'd like to ask you, in terms of the impact on working people in the country of this, even of the proposed changes that the Democrats have put into the package yet that is still to pass.
Well, I think we have here another example of how Wall Street and the needs of the corporate elites suck the oxygen out of every discussion about what working people need. If we look, for example, at what underlies this crisis is the junk mortgages that were given out, those low subprime mortgages. Those haven't gone away. Those are going to accelerate. Those foreclosures are going to accelerate in the next 6 months, 8 months, until the spring of 2009, which will be the end of the 2-year reset period for the last of those mortgages. So we're going to see over 1 million homes go into foreclosure in the next 6 months. And nobody's talking about that anymore. And I think that that's an indication of the kind of priorities that are skewed. I think that if there is a problem in Wall Street, that something does need to happen there. But to have this tremendous attention just to that without talking about what's really going on the ground with people who are losing their jobs, with people who don't have, health insurance, with people who don't have their homes and are not going to have them in the next 6 or 8 months, I think that's taking us in the wrong direction.
We're going to go to break, then come back. Professor Michael Zweig at Stony Brook University, State University of New York, Stony Brook, and Paul Krugman, New York Times columnist and professor at Princeton University. This is Democracy Now!, democracynow.org, The War and Peace Report. After that, part 2 of our interview with the Iranian president. Stay with us.
The economy. Stupid. The economy that looks for the maximum return, for the quick turnaround, for the short-term gain, for the unearned income, for the big lotto. It's the economy, stupid.